What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Hope you guys are having a wonderful day. I just want to give you guys a heads up that I am in the worst possible situation for Wi-Fi and my setup. So it's probably going to be real tough today. But you know what? We can't miss 2 days in a row. So hit me with a one if you can hear me. Are we good? I have some good lessons for you guys today. We're going to be talking about dealing with losers and the top strategies that I use to overcome that. So yeah, just hit me with a one if you can hear me all right. And again, I apologize for the inconvenience, and hopefully I'll probably just redo this video one day. All right, guys, I see the ones. Thank you again for joining. Okay, so what we're going to do today is we're going to start off with SPY as we always do. I'm going to hit the replay right here. And what we're going to do is I'm going to draw the previous day's high right here. I'm going to put this in yellow. And we're going to draw the previous day's low as well. So we're just going to copy. Oops, what the hell is that? I'm going to hit that. Copy, paste, boom. Love copying and pasting. All right, so here's our previous day's high. Here's our previous day's low in yellow. And what I also did here is I went ahead and I drew our triggers. So if I go to our SPY trigger trades, so our triggers for today were 395.69 to the upside and 391.63 to the downside. Okay, so here's our long trigger. Here's our short trigger. Here's the previous day's low. Here's the previous day's high. Hit me with a 2 if you're following me right now. Does that all make sense? So the first thing we have to do whenever we step into the war zone, whenever we start trading, is we have to draw the map. So the map involves the previous day's high and low. So we understand what we're doing, what's happening, and we have to draw the long trigger and the short trigger as well. So the first candle came in today, guys. I'm going to go to the 3-minute chart. First candle came in, boom. I decided to take an opening range breakout today because I wanted to get short a little bit earlier today with the anticipation that we were going to break this low. And you'll see that we actually got there a little bit later in the day, which was a little bit unfortunate because I ended up getting stopped out on the first play here. And then after that, we had this outside bar. I went long over there. And then you could see I got just chopped out. And, this pattern right here is a very rare pattern. We had a triple outside bar. So this morning was extremely tough for me. Then we came all the way up to this long trigger right here, and we got faked out again. So right off the bat, guys, you could see I'm obviously frustrated. I had a bad morning, and then we come into today's topic. So how do you deal with losers? So the first thing is hedging with different instruments. So I'm going to go over to Amazon, and I'm going to show you 2 trades we took. We took one on Amazon. We took one on Apple. And I'm going to just show you how using other stocks as basically hedges. So what that means is not everything will move exactly with the market. So for example, when you learn finance, when you study stocks, you'll learn that there's something called the beta correlation. And with the beta correlation, what that means is that some stocks move with the market and some stocks don't. And some stocks are more volatile than others. So what I want to do again is I'm going to go ahead and I'm going to draw Amazon's previous day's high right here. I'm going to put that in white, and then Amazon's previous day's low. All right, so my long trigger for Amazon was 128.59. On the Twitter, we gave this one out free yesterday, so make sure you follow the Twitter. So where are we? Amazon right there, 128.59. And also we had the full trading plan right here. Our Amazon long 128.59 and our target 129.26. Let me go ahead and draw that. So what I want to demonstrate to you today is that not all stocks move the same. And that's very important. And that's why I love trading a mixture of stocks as well as SPY. So we're going to put this in orange for our target. So notice how SPY in the morning, so here's the previous day's high. Notice how SPY did not break that high. Whereas on Amazon, if I hit the replay button here, we got filled basically right here on this third candle. We got filled here on the 15. This is the 15th minute candle. So this is the third candle. We broke through our green line, which is our entry, our white line, and then we smashed through the orange line pretty easily. So notice how Amazon had already broken through the previous day's high, and we were able to make about $1,300 on that. Let me go ahead and find that in the Discord right there. So $1,321 on Amazon. So because Amazon was positive on the day, I was still able to survive. And if I didn't have Amazon on as well as Apple, I'm going to show you Apple in a bit, then I would not have been able to continue trading on the day. So that's what I mean. So you have triggers, you have different ideas, but they're not always going to work with a particular instrument. And sometimes you need to mix it up. All right. So hit me with a 10 if that makes sense. Does that make sense? And then we can go to Apple. So I'm going to show you guys Apple as well. Apple, very, very similar. So I'm going to hit the replay here. Boom. But actually, Apple was doing the opposite. Okay. So Apple right here was our short trigger, 153.96. Let me draw the previous day's low, which was right here. Okay. Now watch Apple. So notice how Apple, instead of breaking its high, which was up here, Apple was extremely weak and we shorted right when we broke that red line and we're able to cover on the way down. So did you guys see that? That's what we call divergence, meaning Amazon completely bullish, Apple completely bearish. So hit me with a 4 if that makes sense. So what I mean there's divergence is one stock is positively moving against the market, and then one stock is moving with the market to the downside. And because we have that, these were all shares. For me, all shares. You could definitely use options. I'm using shares these days because I have a lot more size. But essentially, we're able to go long on Amazon, make 1,300, then come back on Apple and make $1,106 short. And right there, my friends, that's only because we're mixing it up. So that comes back to the first lesson, hedge with different instruments. So I like to trade blue chips. I like to trade tech, and I always have. And that's why I mix it up, right? Because the trade plans can work on different instruments. All right. So the other thing is following your system and trust your risk to reward. Okay. So if you're going for a 2-to-1 risk to reward, if you're going for a 2-to-1 risk to reward, how many trades out of 100 do you need to win? Tell me what the number is. So we're going for a 2-to-1 risk to reward. How many trades out of 100 do we need to win? What do you guys think? So we only need to win 34% of the time. So 34 out of 100 trades. So whenever you're trading with solid risk to reward, you don't need to be worried. Don't need to you don't need to you need to trust the numbers. That's what I'm saying. You need to trust the numbers because if you're playing a mathematical game, if your setups are on point, you will win in the long run. But if you are trading just, trusting your gut, or you don't have back tested data, or you don't have a system, that's a different story. But what I'm saying here is trust your system, and I'm going to show you why. So after these three losers here on SPY, we, settled down a little bit, and then eventually we got our short trigger, which is this red line right here. We got that one break and then follow through, and that one was able to get to our target. So we got our winner here on the short trigger, and then the last play of the day was the afternoon Fibonacci leg, which was the biggest winner of the day. This one went for about 3-to-1. If we go from high to low right here, guys, we came back here. I'm going to draw the golden zone for you guys. So we're looking to short between the 50 to the 786 right there. I'm going to put that in yellow. And we came all the way back up into the golden zone today. So we did a little bit of a double bottom here. We came back all the way up. There we go. Here it hits our 618, comes a little bit more deeper, and then we completely roll over. So if I'm not, I don't know what I just did there. If I'm not trusting my risk to reward, if I'm not following my system, if I don't have an edge, then there's no point on doing this. Okay. Because this short trigger, as well as this afternoon Fibonacci leg, was able to cover those three losses, plus the Amazon, plus the Apple. Okay. So that's the key right there. Follow your system, trust your risk to reward. Hit me with a 4 if that makes sense for you. Okay. So we talked about hedging with different instruments. So ideally, we're looking for stocks that are doing things that are different than the market. Some can be bullish, some can be bearish. And that's why I pick the picks every day. I'm looking for divergence. I'm looking for things that are different because that's going to give me an edge. I'm not putting all my eggs in one basket. Then follow your system, trust your risk to reward. And lastly, a max loss is key. So for example, when I lost these 3 trades, if I didn't win on Amazon or Apple, I would have wrapped it up for the day. You cannot let yourself lose more than, let's say, 5% of your account in a given day, because once you lose that 5%, it's not so much that you won't be able to bounce back, but it's more about the psychological part. Because once you get down the rabbit hole where you're losing consistently, then you start to revenge trade, and with revenge trading, you average down, you size up, you double, you do things that you normally wouldn't do, and those can lead to disastrous days. So it's not really so much about having a max stop loss because you don't believe in your system. It's about having a max stop loss to protect you from the psychological plays. The psychological part of trading is one of the most dangerous aspects of trading. So always have little rules to protect yourself. So I just wanted to show you guys that today. You know, it was a tough morning for me, and you know, it is what it is, guys. Some days better than the others, and you know, the week before we had 100% winning days. Some days you're gonna lose. Some days it's gonna be not that easy, and that's why 90% of people don't make it. But I really hope that those three strategies helped you. And you could just see here, this was the last play. We took short triggers live for the last time today. Send me the red bears watching 3912. Here we go. Let's flush it down. Boom. So that's a little bit of my live commentary for you guys as well. So guys, hit me with an 8 if that all made sense. I want to thank you very much again for your time. And this is a long game. I've already done probably 600 trades, almost 700 trades on the year, and I'm up. I'm making money, but there has been a lot of ups and downs at points. Spy is a little bit easier for me just because I've been trading it for so long. But whenever you want to automate, whenever you want to do things like that, there's other unexpected risks. So, for example, some things I've been facing is potentially having slippage, paying a lot of fees for commissions. So, a lot of those things are, you know, you don't know it until you actually trade. And I really hope that I can show you guys, showing my P&L, showing my trading every day. I really hope I can show you guys the reality, because it's really easy to look at stuff in hindsight and say, yeah, well, that would have went for 100%. But sometimes it doesn't, because sometimes you don't get filled. Sometimes there's commissions. Sometimes there's so many factors. I just want to really share my experience with you guys. And this is what we're trying to do to get financial freedom, right? So we have to make sure that we understand all the risk. Okay, as always, my friends, check me out, tradingwars.com. I really appreciate you guys. I appreciate your time. Right now, you can get any one of our 3 books. You'll get 1 month for free. Come trade with us live tomorrow. It's Lotto Friday, so you already know what the deal is. It's going to be a very, very powerful day, very, very serious day. Lotto Fridays are always crazy. So we're going to go back tomorrow. We're going to try to hit it really, really hard. 30 days free. Come trade with us. You get the book, 70 pages, 50 charts. You get the indicators for life. Or you can sign up right here on the main page. So guys, thanks again. I'm gonna post some free picks for you in a second right on the Twitter. Make sure you follow Twitter, and comment, like, subscribe. We did break 25K subs, so once I get back to my regular setup, we'll be doing some. We'll be doing the $500 giveaway probably near the end of the month. Okay, yeah. So tomorrow is gonna be crazy with the quad witching. Yep, it's gonna be a very, very special day. So be ready. Thanks again. Appreciate you guys, and have a great evening. All right, guys, take care. Don't forget to comment, like, subscribe. All right, we'll be doing the giveaways on Sunday. Thank you very much, and I will end now.